So good afternoon. It's 11:30. So to respect everybody's time, we're going to get started with our understanding property tax and our EPIC proposal seminar webinar. A couple of items to note: this will be recorded, and the recording and the slides will be sent out to all participants this afternoon. Also, if you need CPE, there will be a polling question during the webinar that you must answer in order to receive your CPE certificate from us. So let's dive in. And if you have questions, please put them in the chat and we will answer them as we go along, or I will. Brian may save his till the end. So, but you have two presenters today. Stacy Watson with Lutz. I am a shareholder and in charge of our state and local tax group. Brian Sloan is the president of the Nebraska Chamber of Commerce. And Brian, if there's any other special things you want to tell people about yourself, we'll let you do that when you do your part of the presentation. So we will get going. And I like to remind people I am a fast talker, so I will try and slow down. But again, as questions come along, let me know. My part of this presentation is really property tax in Nebraska, the valuation and assessment process. And I know that especially, I'll say post-COVID, our property taxes have been increasing, right? And so we're going to talk about the valuation, the levy, the assessments. Are there ways that the process can be changed or improved? And also individually, how do you affect this process? Because I think that property taxes can be affected by the individual and the choices that we make at the individual level. Is there a chat question? Oh, what? Okay. So, okay. On to the next slide. So let's talk with the valuation, just some background. So just so everybody's aware, before Nebraska became a state, so in 1857, the territory was actually assessing property taxes. Okay. It became a state 10 years later, but then in 1966, there was a constitutional amendment that actually abolished property taxes assessed by the state. So just so everybody's aware, the state of Nebraska does not assess your property taxes, okay? The property taxes are collected at the local level by about 33 different districts. So it could be more, it could be a little bit less. But property tax is basically assessed value. So an assessed value is determined by the county assessors times a levy. That levy is a whole bunch of different little political subdivisions included in there, minus any credits that we get. So that I get, and there will be an argument for people that the state may mandate some things at the education levels or other ways that require the property taxes to be collected, but the state is actually not the one that is assessing the property taxes. So just so we're kind of all on the same page there. So also constitutionally speaking, the Nebraska Constitution requires that property be valued at actual value. And that is defined as the market value of the property. So really what we're looking for is 100% at the residential level, let's just say, and 75% in the ag community. How do assessors get there? Because this is really what the county assessors do. So the way they get there from our perspective is, they look at comparable sales. So let's think about what's happened in the last number of years, right? If you go out to buy a house, I'll just use my old house, for example. We bought our old house for $112,000, say 18 years ago. We watched the sale of our house for $298,000 18 years later. That's a huge increase. Okay. But when the assessors go out to look, they have to look at what's been sold in your neighborhood, in your area. Is that house comparable to your size? And if they are, they have to raise the actual value of your property as required under the Constitution. So it's not, I don't want to paint the county assessors out to be bad people because they're just doing their job. And they're actually audited by the Department of Revenue as to whether or not these values are in line with what the guidelines are and what our Constitution says. So think about the fact that you actually went and bought one of these houses. So if someone saw that the sale of my house 18 years ago to the people who were currently living in it was $112,000. When they go and buy that house at $298,000, I think that's pretty good actual value, right? So the old owners may not have been paying property taxes on a house worth $298,000. Maybe it was up to 190 or 200. I didn't actually look at that piece of it. But when you buy it, I think you're giving a pretty good indication to the county assessors what your actual value should be. So I understand that, that's created higher values for us. Okay, so we'll look at the next slide. But, should higher values necessarily mean higher property taxes? Maybe, maybe not. That might be one of the ways we look at fixing them. But if you think about it, we have over 30 political subdivisions that determine their levies. The largest part of that levy by far is the school district. So whether you live in the Omaha school district, one of the Lincoln school districts, I happen to live in Millard, those budgets of the school. So basically what happens is each one of these political subdivisions determines a budget. How much is it going to cost them to do what they do? So part of your levies could be from fire and police officers. So, I'm fairly certain we still want that. Part of it could be to fix roads. If you think about it, a sanitary improvement district, we refer to them as SIDS, right? They're generally going in and building a new property. Well, if they have to put all that infrastructure in that was never there before, obviously that levy probably has to be higher than if you think about a mature neighborhood where almost all the houses are in, or maybe all the houses are in. They probably don't need as much for those infrastructures. So when you think about property taxes, they're clearly based on where you live and what the needs are in that community. And so, my parents at one point lived in Omaha. When they sold their house that they had bought, gosh, I'm old, so they probably bought it 50 years ago. They didn't want to move anyplace else in the area because the property tax rates were so high. So they actually ended up moving out to Plattsmouth and got a house similar to mine in value, but they actually pay almost half what I pay in property taxes. So, it is a big deal. And if you look at your levies, according to the Department of Revenue in 2020, Douglas County's general rate was 2.3%, whereas Sarpy's was about 2%. So where you live matters, okay? And so I'm just giving you an actual, this comes off of a property tax statement, and this is, you receive this as an individual every year. So you get your property tax statement and all of this stuff is listed. I'm guessing most everybody, including my husband, jumps down to the bottom and they're just looking at what's my final number, right? But to be a responsible taxpayer and to truly understand how your property taxes are working, each one of these levies and the authority listed on the sideline, they've come up with a budget, and they have a budget on what's it going to cost that year. And that budget's available to you as the public, by the way. And then they build their levy around it. If you look, the school district, it's second, it's second from the bottom where it gives your consolidated levy number. It gives a 1.23% for the school district that these individuals live in the tax district 10, right? And so these all combine to make a complete consolidated levy for this individual of 2.2%, okay? And so that obviously the largest levy is going to the schools, but there's the learning community, there's the county taxes that are going to help pay for roads, there's a city county building. So there is lots of information in here. And if you look at it and any one of these concerns you, what's the NRD, what's the natural resource district that's levying me, there are opportunities to go to every single one of these meetings when they have a budget meeting and discuss why the budget is what it is. Ultimately, you're paying for the services in your local community by paying your property tax. So next slide. There are also credits and exemptions available to everybody. So the first one is the individual tax return credit. The state started offering property tax credit on your individual tax return based on certain lines, just so you know, on that mill levy report. I'm not going to go into the detail of those lines, but you can get a substantial credit for that, and that would have been applied on your individual tax return. Here's what happens, to be honest with you. Most people, when they get their tax return, they just want to know, do I owe or am I getting a refund? Most of them don't go look at the second page of the return and be like, oh, look, the state gave me $800 back, or the state gave me $1,000 back, right? It's not showing up on your statement that you got from the state that maybe your property taxes went from $4,000 to $3,000. You're getting that back on your individual tax return. And just, as an antidote, 25% of those credits have not been claimed by individuals. So 25% of the people actually have not even claimed this credit on their personal tax return. And so, you're actually getting a credit and your property taxes are actually lower than you think they are. It's just whether or not you're recognizing the lowering of that property taxes, because it could have went to help pay your income taxes that you may have underpaid for the year. So it is valuable information to understand that whatever you're receiving on your property tax statement, there is an offset currently on your individual tax return. And that has been going up for the last 3 years since the program has been in place. The other exemption that's available is the Nebraska homestead exemption. This is available to persons over 65, qualified disabled individuals, and qualified disabled veterans and their widows. So the problem is married filing jointly, the limit is if you make more than $57,701, there is no exemption. There are exemptions prorated, from 10% all the way up to 100%, depending on your income. But for a married filing jointly couple making over that, you would not receive any exemption whatsoever. So the worst thing, we have had anecdotes that older people are selling their homes because they can no longer afford their property taxes. No one in the state wants that. So that's part of what we're trying to figure out. So next slide. Oh, there's a question. Exemption over 65 dependent on your income level. Yes. So that's the married filing joint level. There's other levels for single and married filing separate. So that, and you do have to own and occupy that home also to qualify for the exemption. So income levels do matter, and that's part of probably what makes it an issue. So I want to talk a little bit about tax policy and why we have a property tax, right? What's the reason that Nebraska chose to have a property tax? And I am a huge tax policy person. And so in my mind, what should always happen is for almost every state, you should really look at it as a stool. And a stool that's hugely stable has 3 legs to it, right? I have an income tax, I have a sales tax, and I have a property tax. And the reason you have all 3 of those is because they each have different levers that can be pulled or that change when the economy changes, right? I mean, if you think about during COVID, when first, nobody was going to work and everybody was staying home and no one's spending money at restaurants, et cetera, that probably changed our sales tax revenue. Depending on who was working during COVID and who wasn't, that could have changed our income tax revenue. Property tax is generally considered hugely stable and reliable from that perspective, right? Local governments need a consistent revenue stream with their budgets. And it's not like I can pick up my home and my land and just move it to another district. So they can count on that tax in order to fulfill the needs of their local community. And generally, it's considered equitable. I know if I asked each and every one of you on this seminar that my poll question would be, do you think property taxes are fair and equitable? I'm fairly certain I would get a resounding no. But if you take the emotions out of it and you generally look at the math, and as an accountant, I'm going to look at the math, it is deemed to be equitable. If you think about it, wealthier people tend to own more expensive homes. So generally speaking, the tax and everybody who lives in the same area pays the same rate. So it's generally considered equitable from a mathematical perspective. And, literally from a policy perspective, we would like all 3 legs of that stool to have the best tools to enable the best tax policy in the state. Do we have any questions in there that I'm missing? Let's see. There's also a property tax credit when the state gives, right. So I got reminded, just so you know, on your statement, you're also probably seeing a property tax credit. So you're getting those in 2 places. So ultimately, what you guys are seeing as your property tax, the state is funding part of that for you, both as a credit on your statement and on your individual tax return. Someone mentioned the housing market is now inflated. How does that seem equitable? I don't disagree that the housing market is inflated, but that is the actual value of what someone wants to pay for that house, right? No one's making you go out and buy a new home. And so I get that the values are now inflated. And I think when we go to, is it my next slide that talks about, maybe some of the how we can seem to fix some of these problems? Well, that's my next slide. But I understand how everybody says the housing market's inflated, but also people are choosing to purchase houses at that amount. And constitutionally, we are dealing with actual values. So anyway, let's go on to the next slide. You know, valuation, assessments, and limits. So how can we impact? So I clearly understand your inflated value. I won't move out of my house because I don't want to buy a house actually less in size that's going to cost me more than the house I'm currently living in. Again, I'm an accountant. I'm like, oh no, that seems like a terrible idea. And so I'm not moving. I'm not paying, hopefully, an inflated value. And so how can we do this? So can we lower the range for the acceptable valuation? So if now we're expected to have houses valued at 100%, is there a way that we say, okay, let's move the housing values down? Is 80% a more acceptable valuation? And as we go down these changes, I want everybody to consider that anytime what we lower what we're paying in, that affects the budget and therefore the services that you receive. And so having these things in your local control, like how much do I want to pay for the fire department, right? How much do I want to put in for new streets? Do I want to build the new school, right? And no offense to all of you who live at Gretna, you guys have a sports complex and a school. Or do I want to live in a school district that only has 18 students in a classroom? That costs more than if I live in a school district that has 25 students in a classroom. So every time we talk about lowering property taxes, you have to understand that that affects what you're receiving in the line of services and be okay with that, right? Everybody has a budget. And if we're not going to give money to fund a budget because we think it's too high, we have to understand that that budget has to be cut, no different than your household budget. So can we lower the range for acceptable values? I think we can. Can we cap the increase in the valuation? Do we say the valuation of a house can't increase more than 3%? Maybe it's 5%, whatever those numbers are in a 1-year time frame, right? Is that something we want to consider doing? Do we want to check the chat and see what might be in there? Where's the money coming from for all the property tax credits, exemptions, et cetera? The state is funding the property tax credits and exemptions. So that is coming out of the state's budget. And someone mentioned Oklahoma limits the valuation increase to 5%. So, okay, maybe we do that, right? But let's say, again, all of these, I don't think there's a bad idea. We just have to think about the consequences of our idea. So let's say I want to limit the valuation of my increase in my value to 5%. Okay. I live in Gretna. I think they have another, I'm not picking on Gretna. I think they have another school, you know, or Bennington. I mean, or maybe there's a city out in Western Nebraska that they need a new school because their population is growing, whether that's Lexington or, you know, Grand Island or something. If I'm limiting my valuation increase, am I going to have enough money to fund the next new project that I want to do? So again, I think there's ways to do that. And we just have to be, you know, accepting of whatever those consequences are. So, you know, or do we want to do a levy limit? So one thought process is if I've set my budget and I know my budget, let's just say is $500. I know that's not a realistic budget for anybody, but smaller numbers are easy. My budget is $500. All of a sudden I have valuation increase of 20% with the exact same levy. I'm getting way more than my $500, right? That's not in my budget. Or I'm giving you way more money the next year to use because my valuation goes up. It doesn't mean the school budget should actually go up, right? I mean, maybe that shouldn't change by that much. So if my valuation goes up by 20%, is there a law that we should have that says, okay, then obviously the levy has to go down correspondingly, right? We can have a consumer price index in there. I've kind of given a little bit of an example, but mathematically speaking, maybe not every school needs a budget increase of 20%, school district or all other of these levies. Maybe the levy has to come down because the valuation went up so much, right? Or do we expand the homestead exemption for people over the age of 65 making less than that, no matter what the value of their home is? So all of these are ideas in which I think we can work within the framework to change the property taxes from that perspective. We have another item in the chat. And let's see, an annual percentage limit increase would be nice, just so the adjustment wouldn't be so hard. Oh, again, I don't agree. So I don't disagree, but why doesn't the state just reimburse the counties for the credits or have us pay less in filing and getting a credit back? I think that's easier said than done. because of the way the budgets and everything worked. So I think that is absolutely a proposal on the table. Is there a way we can pre-fund it to the counties? There's some math that has to be considered there, but that is actually being discussed in many circles in state government. Is there a better way to do it? Because I truly don't believe that individuals feel the impact on their personal tax return from that. So just so you know, and if you haven't claimed it, you don't have to file an amended return. The state has been nice enough to put out there a one-page form that says, I didn't claim it in 2019. Here's what I should have claimed. Please give it back to me. So it is just a one-page form you can file. And why not adjust the valuations on a mass basis instead of property by property, example by subdivision? Because those levies are by subdivision, and what you're choosing to do, and this will get into my next slide, is what you're really choosing to do. We can go to my next slide just so we can talk about it. So this is an individual responsibility. I know I'm never the most popular person in the room at Thanksgiving and Christmas when I want to talk about property taxes. Nobody likes me because I do hugely preach individual responsibility. So everybody wants the nicest, newest school. Everybody wants 18 kids in their classroom, which, by the way, doesn't actually prove that it impacts better test scores. No offense to all of you who want that. But actually, every time you go into the voting booth and you decide to vote for a new bond, which again, school districts are the largest part of our property tax statement. And I'm not saying building a new school is a bad idea, right? But do you understand the cost that's going into that school, what you're getting, what you're using it for? And so every time you go into their voter booth in November or whenever you have, I think Elkhorn actually got a ballot in the mail to vote for a property tax increase. That is actually what you are doing. You are increasing your local property tax in your local district for the school that you want when you check yes on the bonds. And I know sometimes they're like, it's not going to increase your property tax, because they're not telling you that they're paying off the old bonds. And if you didn't vote for the new bond, your property tax levy would actually go down. So you have an individual responsibility in this process to understand what you're getting. And this is what I tell my family all the time. So you go out and you want to buy yourself a Lamborghini. You want the best car you could ever have. I drive an 8-year-old Ford Explorer because I don't want a car payment. So then you get your car payment statement, and in this case, your property tax statement, and you're like, oh crap, why do I owe, an extra $1,000? Or why are my property taxes so much higher in this district than in another district? You went in and you voted for that school. So you want me to help you pay for your Lamborghini when I'm not making payments on my Ford Explorer. So there is a personal responsibility aspect here, right? Attend the budget meetings of your subdivision. If you don't like your valuation, you can protest it. Vote for your school board members. These things are all within your control when it comes to property taxes. Do we want to check out the chat? I'm sure all my statements have been super popular. It says, can you use the one-page form for a corporation? Yes, it can be used for any entity that was paying the property taxes. So since the state is providing these credits to homeowners, taxpayers, does the state ever audit how the locals spend their levies budget? I actually am not qualified to respond to that, so I will get back to you. What am I missing when a farm is valued as $1 million, which gets 2 credits, is only paying $1,000 more in taxes without credits? Do they only get to write off the office portion of their home? That seems like probably a little bit longer question. And I can get back to you on your question after this. So although she does say, I am from rural Nebraska, and I think there's a misconception that rural Nebraska is supporting the new schools, et cetera, costs. They're having trouble getting bonds passed for their new schools, and we are passing bonds, which I think is important, by the way. Again, I'm not saying no one should ever not go in this box and check the box to pass a bond. I'm just suggesting that when you do go in and you check that box, you have to personally understand the impact that is making. And when we have declared that, the state's not the one charging the property taxes, that's a local tax choice. And so I'm okay with all of that. And the state is trying to help offset some of those property taxes by giving credits, but you have to understand that you're raising your individual taxes. So we need to be obviously cognizant of that. And how does the ability to change the property tax structure restricted by the Uniform and Proportionate Clause in the state constitution. There are some of the changes that I've discussed that may require a constitutional amendment. That is absolutely correct. But that is people smarter than me to understand. But I also think if we put something on the ballot that said this would lower your property taxes, fairly certain, even if it's constitutional amendment, that's probably going to get a vote. Says in rural areas, farmers many times have land in the school property taxing districts and do not live there, so they cannot vote. That is absolutely true. So you may have land, but if you're not a resident there, you are not voting, and you may be a majority of that bond payer. So that is absolutely true. So let's see. The form states if you previously filed your 2022 1040N, but you do believe we can use it for an 1120N. Yes, I do believe you can use it for the corporations. Oh, Russ corrected me. Businesses have to amend their returns. Thank you, Russ. I thought I used it, but you're right. I used it for a Schedule E. So businesses do have to amend their returns. Individuals do not. So, and Tammy, thank you. Local governments are required to be audited annually. And those audits are submitted to the state. So I knew that they looked up and saw that I knew the Department of Revenue looked at value. So obviously the local governments are audited annually. The state gets those reports, seeing how they do spend their money. So is there a limit how many years you can go back on the amended PTC form? Not the one that's out there, but I don't know if for the return that has to be filed. I will double check on that. How well has property valuation protest been accepted by the county? Hall County has been really hit and miss. I truly think that depends on the facts and circumstances of your protest. And so that's a harder question to answer. So, okay, I think that is the end of I was trying to get mine done. I'm pretty close to my 25 minutes. Brian, you're up next. We will have a poll question next. If there are additional questions, let me know. I know property taxes, if you think about it, they're probably the hardest tax in the state to levy. They're complicated. And just know that, that's complications for the senators as well. So anytime we want to change something, you're right. Do we have to look at amending the Constitution? What can we do to make these change? Who are we affecting? And are we okay with the changes to the budgets that we're affecting? All of those things have to be taken into account. And I agree, one of my favorite discussions this time frame is I would love to take that property tax off the individual return and give it just on your statement. So all of these are ideas that are being discussed at all levels. So don't think any idea is a bad idea if we have one for helping property taxes along, but also do consider your individual responsibility when voting for things. Or just show up to a budget meeting. I think if 10 people showed up to a local budget meeting, the people in your locations would be thrilled. So on to bigger and better things. Brian, you are up next.
Well, thanks, Stacy. Really appreciate that. I'm going to talk a little bit about a proposal that's out there as a potential ballot initiative. It's in the process right now of a group of people are trying to obtain enough signatures to put this on the ballot, but it's called the Epic Tax Proposal. And I just wanted to talk through what it really is and how it would work and kind of how we take a look at this. It's clear that as I went around the state this summer, that most people received in the state, all across the state, 10 to 20% valuation increases in their property, and so that has everybody very, very concerned about property taxes and what's going to happen to levies and what the ultimate cost is going to be. So property tax is at the forefront of a lot of people's minds right now. And the proposal of the Epic proposals, what it says it will do is it's a proposed constitutional amendment to replace property taxes, income taxes, and sales taxes and inheritance taxes, which are the bulk of our state's revenues, both state and local, with one consumption tax, which consider it just a giant sales tax, and go to basically a sales tax only taxing regime. And it would apply to all the retail sales of any new goods and all services. Currently, from a sales tax standpoint, we don't tax most services in this state. We do tax most sales of goods, but not all. And And then certain government services to individuals would also be taxed. I want to talk about that a little bit later because that's a big deal. There would be generally no exclusions except for a couple. One, groceries for off-premises consumption, and B2B transactions, basically transactions between business component costs that businesses incur. And it would only be the final new products when they're sold to consumers that would be taxed. And it would not, there would be no sales tax exemptions that we've generally had in Nebraska or even in comparable states. Generally, every consumer sale or a government service that looked like a consumer sale would be taxed under this. And the thought is that the rate could be somewhere around 8%. That's moved a little bit up and down, but generally around 8%. And there's an associated economic study that says it would be possible to have it at 8% and meet all our needs for state and local government. And then it provides also that if necessary, local governments within the state could also enact their own consumption tax in addition to this. And so the general argument is, well, why wouldn't we want to get rid of all our taxes if all we had to do is pay an 8% sales tax on everything? You can see the appeal of that on its face until you get a little bit deeper into it. And so if you go to the next slide, I'll take you a little deeper into what the issues that we see with this proposal really are, and it's a little bit troubling to say the least. So why don't I move to the next one? Or this is fine. Sorry. Essentially, we tax 6.5% sales tax now, so you can imagine that 8% sales tax is generally not going to get us there, because sales taxes are a much smaller portion of our state and local revenues right now than property tax, income tax, both individual and corporate. On day one, this tax would have to raise over $11 billion to fundamentally pay for all the state and local taxes that we collect now. To actually make that happen on day one, we've estimated the consumption tax rate would have to be at least 12 to 20%. And so essentially everything that everybody buys, we would put a tax on from about 12 to 20%. We already, having a big part of the problem with our property taxes right now, if you go to root cause, is that our housing costs are going up way up very quickly. It's a function to some extent of workforce and the lack of capacity in housing construction. There just aren't many affordable homes being built right now. And it's supply and demand with very few houses on the market. House prices are going way up. This would add another 12 to 20% on top of those costs. The potential to find affordable housing to qualify for mortgages would become even harder, and it would actually continue to create problems for people buying houses. More importantly, if Nebraska started charging a 12 to 20% tax on all of our retail sales, it would have a dramatic effect on our downtowns and retail districts when Kansas and Iowa and South Dakota are not charging that much. We would simply move a lot of our business and our economy across state lines, and particularly in Douglas County and places like that, or that are close to a state line. This would be great for Council Bluffs, not great for Omaha. Let's put it that way. In terms of the main issue, I mean, I spend most of my day this workforce issue that we have right now, and basically declining enrollments both in college and in K through 12 in this state is troubling. And it's projected to go on for another 15 to 20 years. We are at the front end of this workforce issue. The key to Nebraska's economy, the key to reducing our taxes, the key to having an economy and communities that can continue to thrive is we have to do a better job in Nebraska of attracting and retaining younger people, particularly young families. The problem with this tax is the people that get taxed the most, whether it's a sales tax or a consumption tax, are the people who have the highest consumption as a percentage of their income. That is generally young families. And the more children you have, anybody who's had children, you know that your consumption goes up. And so essentially families would pay more. It would be a disincentive for young people to move to Nebraska and for families to grow within Nebraska, which is the opposite of what we're trying to do. There's some questions here. Would it apply to medical services? And the answer is yes. So if you privately pay for medical services, this would tax that at whatever the rate is, 15, 20. I believe that it's hard to tell exactly from the legislative language that on proposal those would accompany this. But this issue of government services, it's not clear to me that if Medicare paid, for instance, the services, whether that would be taxed. You can't tax the federal government, so who ends up paying the tax? It's concerning drugs would be taxed, everything again except for food consumed at home. This is a shift from people who own property to basically people who have a higher percentage of consumption of their personal income. That's typically young people and seniors of moderate and lower incomes. It would eliminate local control over school budgets. Essentially, what this would mean is all taxes would be collected at the state level, and all budgets would ultimately have to be approved at the state level. They might be developed locally, but ultimately they'd have to be approved, and the Appropriations Committee would have to approve all budgets. And then this issue of which government services, things that the government provides us, would be taxed at this rate is unclear, but it could really affect people who are dependent on government services if suddenly they had to pay a 12 to 20% tax for those services. So let me move to the next slide. I told you that there would be a initial, at least an initial issue financially for the state. On the top left-hand box is what we currently collected in 22 in taxes, and you can see that the sources of revenue, and this is the three-legged stool that Stacy was talking about. We collected about $11.8 billion to fund state and local government in Nebraska. Our population is about 2 million. Out of that 2 million, about half, 1.0 is employed. Per capita income is 38,000 per person. So let's say we had a 7.9% EPIC tax, and let's say that everybody spent every dollar they made. So we take those 2 million people times 38,000 per capita income. That creates 76 billion. If they spent everything they made on taxable personal consumption and then took the 7.9% rate, we get $6 billion of revenue, not 11.1. And while there's some minor adjustments for other taxes, we'd end up $5 billion short on day one. Nebraska can operate on that. We do not have any loan authority in Nebraska, and we'd have a fiscal crisis. What would have to happen, and that's why we say it would take a 12 to 20% rate, is on day one, either the state would have to increase the rate or local governments would have to form their own consumption tax to make up that difference to pay for their schools and local government costs. And we would end up with a combined rate of clearly double digits. And it just depends on how many exemptions were created of 12 to 20%. Got a question, will the agriculture industry pay sales tax because they don't pay them now? Under this, everybody would pay for personal consumption, but not business consumption. So agriculture would not pay the EPIC tax on business expenses. That would be part of the B2B. I don't have any examples today, but we will be publishing some soon of what this means for lower income taxpayers. The good question is, why are Nebraska taxes so high compared to Missouri and other states? Is Nebraska looking at some solutions? There is, so within our area, we look at this all the time, which is, are we competitive with our neighboring states? We are competitive at this point, actually very similar to Iowa. Missouri has uniquely low property tax rates compared to other states around us. That's primarily, I believe, because they have more corporate individual income, because they have much larger urban centers in Missouri. And so income taxes tend to be a bigger portion of their revenue stream. But compared to Iowa and other ag states, we're getting closer. We've typically been high in income tax and high in property tax. Over the last number of years, though, we've made some very significant strides in Nebraska. Actually, since 2015, there's been about $21 billion of tax relief passed that some of it won't occur now from 2015 to 2029, but over that time, there'll be 21 billion. The biggest was last year, Governor Pillen's bill, and very substantial in the billions of dollars of relief that comes through these income tax credits and also comes through some additional education funding, a commitment of $2 billion to additional education funding. That will flow through in the coming years. I agree with Stacy. Not everybody sees the savings that already have occurred because they're not always on your statement. You have to go get an income tax credit to get a big portion of this. But over the next few years, you would expect that the schools would also reduce their levy rates related to the additional education funding. So there's more aid coming on this, but at this point, we're at the higher end, but there's been some very substantial progress, with the one exception of this valuation question. I would say many states have addressed this valuation increase question. I think Nebraska has yet to do so. It's certainly something the governor's looking at right now. So if I could go to the next page. This is the loss of control around school budgets. What would happen is schools would create their budget. It would go into one of 5 groupings under the legislation that has been proposed around this. And so 19 counties would come together, and then that school budget would be reviewed at the regional level, and then ultimately that would go to the state legislature and also have to be approved. So ultimately, your local school budgets would become regional budgets and then become a state budget. Depending on how you feel about local control, this is a good thing or bad thing in this process. Let me move to the next slide. Essentially, again, this is sort of unilateral destruction from a business standpoint. If we ended up with a 15 to 20% consumption tax on the sale of our goods, 75% of our population and 75% of our businesses are within 40 miles of a border. People would simply buy their goods and services where they could across a border, and our competitiveness would drop not only within the country but also within the state. And very big concern for seniors, what it would do to their purchasing value. Essentially, moderate income seniors who've saved their entire life, been taxed on the income that created those savings, would be taxed again as they spend it with this consumption tax. So it'd be essentially a double tax on savings of seniors. A question: are there enough votes in the legislature to get this through? This is not a legislative proposal in Nebraska. The citizens can bring a petition for a constitutional amendment, and so when people sign this petition, if it gets on the petition is to get it on the ballot. The ballot would be a year from now in November. If it passed, then it would be enacted into law, and the legislature would have to enact it. So this is a ballot initiative rather than a legislative process at this point. Although there is legislation in the legislative proposal that's still active in the legislature. Would this tax apply to auto homeowners insurance purchases as well? It would absolutely apply to new home purchases. It would apply to new auto purchases. It would not necessarily apply to insurance purchases. I did not cover that, but insurance pays its own premium tax, and so that may well be exempted, but that would be one of the few exemptions. Banking fees and things like that would be taxed. The question is the tax code set up for businesses? They don't look like they make any money. This is a heavy burden for individuals. Why we're in the bottom of the 10 states for school funding in the US. I think what you've seen, and what in those numbers you're not seeing yet, at least on the school funding part, is Governor Pillen's legislation last year created $1,500 additional state funding per student across the state. So Nebraska went from whatever the state school funding was before, to something that's now much more significant. How would this impact 501c3s? Essentially, 501c3s would only be taxed to the extent that there was personal consumption. So if they were selling something for somebody's personal consumption, they would have to collect the sales tax. And it's only on new home construction, not existing homes. But to the extent you're having services to make repairs and things in your home, that would be subject to this tax. So if I could go to the next slide. So what is the solution to property taxes? Because I'm as frustrated with property taxes as anybody. I had a 20% valuation increase this year. whenever somebody tells you and says there's an easy solution in taxes after 35, 40 years of working in the tax world, there is no easy button solution here. There's an old adage in Congress that, tax policies is don't tax me and don't tax thee, but tax the man behind the tree. Everybody wants to tax somebody else to reduce their taxes. As a chamber, we have a policy that just mere tax shifting from one group to another, whether it's from higher income to lower income or lower income to higher income or urban to rural, this tax shifting of trying to move burdens from one group to another really never lowers state taxes in Nebraska and never makes us more competitive. There's only one way that actual tax reduction actually occurs, and that's to keep spending below economic revenue growth. It's the same thing that happens in your house. You only start making progress when you spend less than the increase of what you make, and then take those excess tax revenues and use them to fund government services, in this case on property tax, local services. That's essentially what we've done the last 10 years. And that was essentially what Governor Pillen's bill was last year, to the tune of about $20 billion. And an earlier question, how is all this funded? It's funded through income taxes and sales taxes. So income taxes and sales taxes are paying a greater burden of our overall burden over the last 10 years, but we're funding it from revenue growth rather than taxing new people. And that's a big deal. This is the approach. Stacy asked, I ran for governor unsuccessfully in 2014, but this is something that both then candidate Ricketts and I were both saying, which is that the path forward is always, there's no way to cut taxes without keep spending under economic growth levels. And so the two things you want to do is have controls over spending, but also have a tax code that generates economic growth. When you tax consumption and if you get it to high rates, you are not going to create economic growth. You're going to do the opposite as we cease to be competitive with other states. So generally, you want to keep your tax rates at or below the rates of the states that surround you. And that's a huge issue with this EPIC tax. Our property tax is going to go away. The reality is, in this three-legged stool, there's a few states that don't have sales tax. There's a few states that don't have income tax. The ones that don't have income tax generally are the ones that have either coal mining or oil or tourism. There's no state other than a few areas in Alaska that don't have property taxes. I don't think that we're ever going to see this. And my last comment there is, this idea of an EPIC tax has been around as long as I've been in the tax world, which is over 30 years. Similar proposals have been out there probably since the 1960s when the sales tax first came into place. No other state has done this because as an individual state, it would be sort of economic suicide. If it's ever done, it should be done at a federal level. But even that, if you look at the European model, all the European countries have adopted a consumption tax that's generally a VAT tax, but they've also then kept an income tax. And so that's the worst of all worlds, as they've increased taxes. So the core issue is Nebraskans are not taxed too little. We have got to continue to create the economic growth to fund tax reduction, and we're doing a great job of it. We're actually pound for pound the second fastest growing state in the country right now. And so that's what created the revenues the last few years for tax reduction. We need to continue down that track. Got a question here. It says most consumption happens in urban areas. That consumption would be funding lower consumption in rural areas. When the majority will soon be urban, get frustrated when they use the legislative majority to stop such wealth shift. Where does it leave rural Nebraska? Actually, I've done back the envelope analysis on this for many years, which is, it is true urban areas tend to pay more in income and sales tax than rural areas in Nebraska, but rural areas clearly pay more in property taxes. So it's no surprise that from the standpoint of shifting taxes from one to the other, it benefits urban and rural. But generally, the differences balance out when you have the three-legged stool. I have one note here. I've listened to your presentation, but I'm still supportive of EPIC because I'm paying $16.82 every single day, every single year in property taxes. I'll put it this way. At this point, if you're making, and think of a middle two earner family, young people, and between them they're making $100,000, and they've got 4 children, but they're spending 90,000 of that. At a 20% tax, their tax would be 18,000 just at the state level before they ever pay any federal taxes. They're now up to something over 50% when they add federal or close to it in employment taxes. This is simply incredibly difficult for lower income people trying to make a living. Epic would be great for me because I'm at the latter stages of my life. I've accumulated 2 pieces of real estate and I pay lots of property tax. But for my children, this would be incredibly difficult. And right now, the number one thing that the state needs to continue to grow, and actually the number one thing that I'm most concerned about is this going to be a state that continues to attract and provide opportunity for young people? Because if we don't, we will not have the economic wherewithal to continue to grow the state and grow our tax revenues. I think that does it, Stacy. I'm happy for any other questions that come in.
I just wanted to say, Brian, under your current example, I think that tax rate was like $39 a day for the couple paying their taxes. So, you know, I agree from Brian's perspective. I mean, first of all, just so you know, as a state, we're hugely conservative. We rarely ever do anything first, right? We let the other states test it out when it comes to tax stuff. And so I do not think that being the first state to do something that no other state has done and has looked at over and over and over again in the last 100 years is probably a good idea. But I also want to, you know, again, I really wish all of you would pull your individual tax returns. And I know it's going to take, you know, a little bit to see what Pillen did in the last legislative session and what all of our legislatures did to help lower those taxes for you. I know everybody feels that burden, but I think they're lower than you think they are. And again, to Brian's point, valuation is a problem. And there's many ways to solve that, but it's not easy when you guys think about it. And we do have term limits. And so even in this seminar, we can't dive into every single thing from a property tax perspective. So imagine as a senator, when you're trying to figure out how you're going to pay for something or how you're going to undo the property tax system to make property tax lower, it's not an easy puzzle to solve. So, Brian, I don't know if you have any last comment.
No, I think my last comment is, look, I as much as anybody, I share everybody's property tax frustration. And I understand the people who want to say, well, the system's never going to work, so let's just blow it up. And if we have a $5 billion problem, we have a $5 billion problem. That would be a disaster for our state and our communities, our credit ratings, our bond, our loans. It would be a disaster for Nebraska. And it's just something beyond anything we would ever do to this state. We've got an incredible state. We've all benefit from living in what truly is. I've had a chance to live all over what is the greatest place to live in the world. We have traditionally been a high tax state. We've made really good progress. I think as the Pillen proposals from last year start to weigh in, you're going to see further progress around this. And if there's further and smart decisions made around valuations and levies, to Stacy's point, clearly allowing schools to be built and resources where there needs to be resources, but being smart about how we're doing it. I think Nebraska can be very competitive with all our neighboring states, and we're getting really, really close. And I would say at this point, I've got to pull some more data together. I think we're very competitive with Iowa.
And just so you know, you guys will get a copy of the slides and this recording this afternoon, so that will all be available. What are your thoughts on the federal cap on salt taxes? I mean, right now, sales taxes are a deductible tax for the state and local taxes on your Schedule A, assuming the federal cap is lifted. So I assume consumption tax would fall within the sales tax borders, but I have not read the code completely. So Brian, you may have a comment on that, but we appreciate your time. I know property taxes are nobody's favorite thing. So hopefully we can pay attention and work together and, you know, understand that there are changes being made.
Yeah. No, and I think this is, Stacy, my last comment is, man, we have to keep working on this. and not only property taxes, but continue to make sure our income taxes and our sales taxes are competitive with other states. We just simply cannot afford to be uncompetitive in any one area or make any one area uncompetitive with other states.
Amen. Agreed. Thanks, everybody, for listening. Have a fabulous day.